Circle and CoreWeave are two of the best IPOs I've ever witnessed. What does their performance tell us about investor appetite? In IPO Radar news, TerraPower and Ramp raise funds, Gusto disappoints with a tender offer, and a tale of two AI startups. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of AccessIPOs.com, and we can't ignore what's going on with Circle and CoreWeave. These are two IPOs that happened earlier this year. Circle just 2 weeks ago. And as I'm looking at it today, it's up 600% from its IPO price. Fortunately, I was able to get access to that deal at the $31 IPO price, and I'm still holding it. And the main reason I'm holding it is because Fidelity has this flipping policy that says if you flip within 15 days of the IPO date, then you'll be restricted from future IPOs for, I think, 180 days, then 365 days, and then permanently. And I don't want to be locked out of future IPOs at Fidelity, so I'm not selling shares until I'm past that 15-day window, which ends this Friday, today, while I'm recording this. So I'm not going to risk selling today. I'm going to wait until Monday, and I'm going to sell some of my shares. My first objective with selling a little bit is to recover my cost basis, which is $3,100 to purchase 100 shares. And I'll probably sell 20 to 30 shares so that I can lock in some profits. Now, would I buy shares of Circle today? Absolutely not. I would not pay upwards of $200 for Circle shares. Something's happening with this stock. I think it's got to do with being a crypto company, and there aren't a lot of pure crypto companies out there, certainly not stablecoin companies. Crypto investors see an opportunity to buy up shares of this company when there's a pretty small float out there. And as you know, Bitcoin investors, a lot of crypto investors just want to hold. They buy and hold. And when there's no shares available for sale, the price has to go up. And that's the only explanation of why the price is going up. People are buying the shares and riding that wave up and not selling. And that's led to this incredible overvaluation of a company that's just not making as much money, doesn't have the revenue to support this valuation. But in a public market, after the IPO, let investors decide what the valuation is. As I'm recording this, Circle is trading at $227 a share, and that's a market cap of at least $55 billion. That's what it says on Yahoo. I think it's higher than that. And at $228 a share, Circle is up 637% from its IPO price, which is extraordinary and is really out of whack. Now, this is by far the best IPO I've ever participated in, and I've been holding this long mostly because of Fidelity and their rules and the flipping rules. I want access to future deals. So on Monday, I'm going to trim a little bit, and then I'm going to let the rest of this run because I'm getting the sense that the crypto investors are very enthusiastic about stablecoins. Politics happening in crypto and stablecoins. The Genius Act was passed, I think this week or last week, which is positive for the industry. And this is one of those cases where you buy this stock and you hold it for however long. It could continue to rise. It could crash completely within a year. I'm willing to hold a lot of these shares longer. To me, this is funny money at this point, so I'm going to pull out some profits and reinvest that money somewhere else. And at some point, if it keeps going up, I'll probably sell a bit more and then hold a piece of this for the long term, because I don't want to look back 10 years from now and say, oh, if I had shares of Circle at the IPO price and I sold it, and now look where it is. Maybe it'll be a huge company someday. Maybe it won't. Probably won't. But I'm still going to hold on to some just so I have those original shares and can say, hey, I held on to this for a time. And I still pulled out some profits when the valuation was really out of control and absurd, up 600% from the IPO price. It's funny money. We'll see where it goes from here. CoreWeave also up tremendously from its IPO price. I'm looking at this now. It's trading at $181 a share. That's up 350% from its IPO price. The IPO price was $40. It's now trading at $181 a share. Extraordinary growth. So what does this tell us about investing right now? Well, we've watched several fintechs go public. eToro, Webull went a few weeks before eToro. Chime was another recent fintech IPO, but Chime is only up about 17% since its IPO price of $27. It's now trading at $31.56 as I'm recording this Friday morning. Chime is a bank, a neobank, and people aren't all that excited about it. And I wasn't expecting people to be too excited about it. The IPO got some nice traction out of the gate. It was up 37% the first day, but it's fallen back from there. And as I said in a previous episode, it's not a crypto company. And so the crypto enthusiasts, they don't care. They do care about the Geminis and the Krakens. There's a company called Bullish, another crypto company that filed confidentially for an IPO. It's not on my radar, but I may pick that one up. So fintechs alone is not what's driving investor appetite. It's crypto. And the other type of IPO that's driving investor appetite is AI, pure AI. And we see that in CoreWeave. So these recent IPOs are giving us a few data points to help drive our future decisions. AI pure plays well received. So that could bode well for Cerebras if it ever comes back to its IPO. Klarna doesn't have that crypto aspect to it. People were really excited about Klarna, but not like Circle. So I don't think we'll get anything near Circle type returns really ever again, but certainly not from Klarna. Cerebras, on the other hand, being a pure play AI in the chip space, could see enthusiasm, although in the private markets right now, in the secondary markets, Cerebras shares are down. And I'm not sure what the holdup is on this IPO, so we're still watching it. But AI, cryptocurrency, stablecoins, that's where investors want to invest. And there are only a few companies that would satisfy that appetite. Certainly Ripple is one of them. Gemini could be another. Kraken, another one. In the AI space, there's several of them, but none of them are really indicating they're ready to move forward. Another potential one is Grok, G-R-O-Q. I heard on another podcast that Grok could be moving toward an IPO, although no definitive report on that right now. And of course, the LLMs, which are driving these very high valuations right now. We saw Anthropic at 60 billion. xAI is now over 100 billion, although I'll be talking about that one at the end of the show a little bit more. OpenAI certainly is working its way toward an IPO if it can get away from its relationship with Microsoft. So lots of AI and crypto out there, just not a lot that are planning to go public. And who knows how long these private valuations are going to hold up. I get the sense that some of the private AI valuations are not going to hold up in the public market, but we won't know until one of them gets out there and so we can see. And Anthropic, OpenAI would be the ideal candidates to drive the rest of the market. But at this stage, we're not getting anything other than we got that CoreWeave, and that's why it went up. It's the only pure play out there, and that's where investors want to put their money. Let's move on to IPO Radar news. This is when I talk about companies that are under our universe of private startups that we monitor the news to see what's going on. Typically, I've already written about these, and they're on my website, so you can search for them on the website. And when any interesting news comes up, I usually update the website, I update the Access Club, and when it's very interesting, I'll talk about it here. So I've got 5 IPO Radar stories I want to talk about today. And earlier this week, I was out of town and I wasn't paying close attention to the news and I didn't really see much happening. But when I sat down to put this podcast together, I found there are several stories that are really significant in our space, even though we're headed into the summer when things tend to slow down. We had heard that StubHub was planning for a late June to early July IPO, and that one hasn't come together. So I'm sensing that maybe we're going to start seeing some updated filings in August, and that'll lead into a fall IPO wave where we might get another handful of high-profile IPOs in September, October, November, and even into December. So as we wait for stories that push companies from that private status into the public market IPO status or IPO pipeline news, we do have a few stories here about companies that are raising money that we haven't heard about in a while. And then also, some companies are growing really fast, and then we have a growth story that maybe is starting to hit a bit of a ceiling. First up is Ramp. Ramp is, I guess it's a fintech startup or more of an HR corporate management startup that focuses on corporate credit cards, expense management, travel management, procurement, and accounts payable. And this is software that is for enterprises, but it's very easy to use. It's built on a modern stack and competes with some really bloated legacy companies like SAP and Oracle. And the story, Ramp has raised $200 million in a Series E that values the company at $16 billion. This deal included a lot of top-tier venture capital firms. It was led by Founders Fund. That's Peter Thiel. Peter Thiel is considered really at the top of his game right now and has invested in some really important startups. And when he's leading a deal, you know it's a top-tier company. Other VCs that participated, Thrive Capital, General Catalyst, Iconic, Coslo Ventures, 8VC, Stripes, Lux Capital. A lot of really top tier venture capital firms invested in this deal. $16 billion is up from a previous valuation of $13 billion. That was back in March 2025. There was also an article that came out that said annualized revenue has doubled to $700 million. According to Caplight, there was a tender offer in March. So that tender offer bumped the valuation from $7 billion or $7.7 billion up to $13 billion. And here we are at $16 billion. So Ramp is a SaaS, a software as a service. And what I like about this deal is it's not an exorbitant amount here that it's gone up. It's gone from 7 to 13 to 16. And I guess that's a double in 1 year, which sounds like a lot, but just 16 billion, when we're talking about another company that's over 100 billion in a little bit, xAI, I'll touch on that one in a second. It seems like a very reasonable valuation for a company that has top tier venture capital support. Its customer list, Stripe, Notion, Discord. A lot of top startups are using Ramp instead of going to SAP or Oracle. Those are going to be servicing some of the legacy S&P 500 type companies. I've actually had a chance to play around with Ramp because one of my partners uses it to pay me. And I've gone into the system a little bit and just interacted with it. And it's just been a very easy to use experience for the end user like me. But I'm sure when you're using this on the corporate side, it's much easier than something like a Concur with SAP or Oracle NetSuite. At a $16 billion valuation, Ramp could be moving toward an IPO, especially if the window remains open, which right now it is open. And we haven't seen a ton of SaaS companies go public. ServiceTitan was the main one, and it's done pretty well. But there's a handful of these HR type companies or travel expense companies that are in the pipeline. Another one is called Navan, Navan. That one is supposed to be preparing for an IPO. Brex is another one that competes directly against Ramp. And Brex has been a long time IPO candidate as well. So at a $16 billion valuation, they could probably raise more funds with an IPO. They only raised $200 million here, which isn't a ton of money. In an IPO, they could raise a lot more, up their profile, and then let the investors and let the market figure out what a true valuation is, because $16 billion for these venture capitalists, that's a nice increase for the investors that have been along for the ride, at least for the past year. A lot of Access IPOs followers, listeners, readers own a slice of Ramp, as I do, through the Fundrise Innovation Fund. Fundrise purchased a stake in Q4 of 2024, it looks like. So nice little gain for Fundrise Innovation Fund investors. We'd love to see this one go public. So watch Ramp in the coming 12 to 18 months and see if we get any news about moving forward with a public debut. Next up is Gusto. Gusto is conducting a tender offer at about a $9.3 billion valuation. We don't like tender offers around here, and that's because a tender offer essentially delays the IPO and it eliminates the need for an IPO in some ways. So it says here, Gusto, HR tech startup, valued at more than $9 billion, is conducting an over $200 million tender offer via a deal led by the Ontario Teachers Pension Plan. So Gusto raised a Series E in August of 2021. And remember, 2021 was at Euphoria, had about a $9.5 billion valuation. This tender is coming in at $9.3 billion, so about the same. So Gusto has essentially been flat. Its private valuation has been flat for the last 4 years, but more likely it was inflated back in 2021, and now it's more of a fair price. Although I'm looking at Caplight, and it's showing the private market valuation somewhere around $7 billion versus that 9.3 where this tender is going to happen. I don't like tender offers because they delay IPOs. And when employees and early investors own shares and they want liquidity, it used to be that they'd shout really loud and the IPO would happen because people want their liquidity. But with these tender offers, companies can get liquidity to the employees, let them sell shares, bring in some new investors, and everyone's happy, except us, the IPO investors in the public markets. What this does is maybe solidifies the valuation a little bit, this private valuation, and perhaps Gusto is going to see this window of opportunity and start moving toward an IPO, which can take a year or more. So hopefully we see another one of these SaaS HR companies go public. Gusto competes with Deel and Rippling, and we know that those two are in this little spat about Deel was allegedly spying, had a corporate spy at Rippling. Deel was actually moving forward with an IPO or moving toward an IPO. But now with this lawsuit, that brings into question if that's going to happen. Rippling is a bigger company. I think it's around $16 billion. Rippling was last valued at $16.8 billion valuation. Private estimated valuation right now, the secondary market is showing about $20 billion. So Rippling is another one that could move forward with an IPO. It just hasn't said it's going to do that. if these SaaS companies want to be public in the next 3 to 5 years, now is the time to start moving forward with the open window and with the perceived administration that's friendly toward IPOs. Certainly the market right now is eager to see them. The only question is the investor appetite there for one of these SaaS companies? They're not all that exciting being HR companies, but they are disruptive against the legacy players. So this is another one to watch, Gusto. It's been on my radar for almost 2 or 3 years, and I don't get a lot of news stories around it. So when Gusto hits the newswire, I make sure to update the website because I don't see a lot of stories about this company, but it's still almost a $10 billion company and could be IPOing in the next few years. Switching gears a little bit here, next up is TerraPower. TerraPower is a next generation nuclear power company. It's widely accepted that to power the future, we're going to need nuclear as one option. Fusion isn't ready yet. Fossil fuels are dirty. Solar and wind can't handle the load. And so nuclear power is having this resurgence of popularity. Of course, it takes a long time for a nuclear power plant to come live. TerraPower has raised $650 million from N Ventures, and that's NVIDIA. So anytime NVIDIA is attached to a startup, and they do invest in quite a few startups, we like to pay attention because computer processing, AI, quantum computing, and whatever NVIDIA is doing in the future is going to need a lot of power. And TerraPower is one of these companies that's going to be able to provide it. TerraPower is most associated with Bill Gates, though. Anytime you see a story about it, it says Bill Gates' nuclear power company, TerraPower, and that's how it always starts. In fact, there are a lot of startup news stories that start with Bill Gates is this, or Jeff Bezos is this, or Elon Musk, or Sam Altman. And I think that just gets clicks on the internet. But Washington-based TerraPower is building a prototype of its nuclear power design in Wyoming. 2030 is the date for making electricity, and we're on schedule for that, says leadership. And by that time, we plan to have something like 10 or 12 other plants under construction. So the key to TerraPower's design is that it uses less radioactive fuel and reduces safety risks and wastes. It uses something called molten sodium, I guess that's like salt plasma, to store the energy, giving it the flexibility to release energy when demand increases. So this is just a modern design. Most nuclear power plants are based on designs that are probably 60 or 50 years old, whereas there's a new wave of companies building more modern nuclear plants, and TerraPower is probably the highest profile one because of its association with Bill Gates and that it's actually building a plant in Wyoming. So if you live in Wyoming, you probably hear about this a lot. I think it took over a former coal plant. So nuclear is certainly making a resurgence in the United States. TerraPower is the one on my radar because of its new design, lower risk design. And I believe they can make these smaller than other power plants. So they're just easier to scale up and build. You still have to go through the regulatory compliance and approval and all that. But once this station is up and running, and if they really do have 10 to 12 in the pipeline, this company could be a growth business, even though it's ultimately going to be a utility just providing power. So this one's been on my radar a long time. It's the first article I've seen regarding this company that's been substantial since last June. So good to see another funding round for TerraPower, and good to see that they're starting to ramp up other projects instead of just this one. And presumably that's why they need this $650 million to start ramping up these other plants that they want to stagger out past 2030. That said, it's likely a long way from IPOing, probably not until 2030, but this is an interesting company to me. And with that Bill Gates element to it and NVIDIA as an investor, it's certainly one to watch. I want to end out the show with 2 quick stories about AI and where AI is right now, sort of a status of what a successful AI startup looks like and different applications of AI. Certainly the LLMs have been the main story over the past 2 or 3 years, OpenAI being the lead one, now valued somewhere around $300 billion, Anthropic at $60 billion, and xAI is somewhere around $113 to $120 billion in valuation. And the consensus that I came to talking to a lot of people and reading a lot of stories is that the AI companies that are building on top of existing models may not be the ones that really have that growth potential. But I think we're starting to see that reverse a little bit, is that these LLMs are becoming lower costs, and there's a lot of them. You've got Mistral, you've got Cohere, OpenAI, DeepSeek, Llama. Facebook is causing a lot of havoc in the AI space. So there are a lot of these models out there, And when there's a lot of competition and a lot of high quality work being done, eventually the cost is going to come down. And the LLM portion of this is going to become more commoditized. Anysphere is this vibe coding company, right? They call it vibe coding, but essentially it's a new way to code. Instead of typing in code, you can use voice prompts and written natural language to tell a software program how to build code. I don't know how to code, but I asked OpenAI to write me some code for an Excel spreadsheet. I had it build an online calculator for me using JavaScript. And I just type in the prompts and it gives me the code and I implement that code on the website. It's really extraordinary. And this tool by Anysphere called Cursor is becoming the standard tool for corporate coding. So if you work for a Fortune 500 company, apparently Cursor is being used by more than half of Fortune 500 companies. They have 1 million daily users. And the story that came out is that VCs are approaching Anysphere to invest at a $18 to $20 billion valuation. And this is up from earlier in June, just June 5th, that says Anysphere raised $900 million at about a $10 billion valuation. So just this month, some investors got in at a $10 billion valuation, or probably April and May timeframe. And just a month later, here we are, and VCs are offering to invest at $18 to $20 billion. Now, Anysphere says it doesn't need the money, that they're focused on building. But if someone's coming to you with so much money and at that kind of valuation, it's going to be hard for them to turn that down. But what's interesting to me is that this is a AI company that's building on top of the LLMs and the models and is not the model itself, but it's the hottest startup out there right now that's still at a reasonable valuation. Cursor's annual recurring revenue is $500 million, and that's up from $200 million just a few months ago. So it's growing extraordinarily fast. But it's doing so on top of the LLMs. Speaking of LLMs, the other story, last story I want to talk about is xAI. xAI, of course, is Elon Musk's AI company, and we've been hearing stories about it all year. It's gone from being a $6 billion company in January of 2024 to being a $113 billion company just 15 months later. So crazy growth, and a lot of that is just the Elon premium. But the story that came out, and actually a series of stories came out on June 17th, just one after the next. It's hard to keep track of this sometimes. xAI is burning through $1 billion per month. But they've raised about $14 billion or so, and they burned through most of that money, or at least $10 billion of it or so. It's got about $4 billion in the bank as of March 31st. So xAI is out raising money again. But if you remember, just not that long ago, they were doing this tender offer, and then they were talking about raising more money. Well, what we find out this week, xAI is trying to raise about $5 billion in debt. Morgan Stanley is helping to put together a deal, but there weren't a lot of takers, it looks like, and so they really had to raise the yield on the bonds they're selling, and it's up to like 12%. So xAI is borrowing at 12% and burning through $1 billion a month. Same day, there's another story that says xAI is trying to raise another $4.3 billion in equity. This is on top of a story that said they're trying to raise $20 billion on April 28th. And just in February, they were in talks to raise money at a $44 billion valuation. They've bought Twitter, X. And so xAI was about an $80 billion valuations. They brought in X or Twitter, and now it's up to 120. There's so much going on here. And then on top of that, there's all these journalists who have sources within xAI, and they're getting these stories all at the same time. And what I'm sensing is that this is maybe a little bit bubbly. xAI is going to borrow $5 billion. They're going to raise another $5 billion in equity. And that's going to last them, 10 months, because they're burning through $1 billion a month. If I'm a venture capitalist, and I guess I'm sort of an amateur VC person, I'm not investing millions of dollars in this stuff, but I would not be investing in this company at a $120 billion valuation until I saw some real financials. And what I'm sensing from these articles is that people are looking at the financials and saying, where's the cash flow? If you're spending $1 billion, I'm going to lend you several hundred million. Am I going to get my money back? Sure, that 12% is a nice touch, right? But where's the cash flow? We know that Twitter's not a very valuable asset. X, it's not throwing off a lot of cash. If you look at the ad quality on there, it's lousy. There are people paying extra money for premium services, but this is not a cash cow. The investment in xAI is a bet on Elon. It's a bet on AI, but this LLM space in Grok, it plays in there. It's a crowded space. You've got Mistral, you've got Google's Gemini, you've got the Llama at Facebook, and Facebook's making a very heavy push, Meta, is making a heavy push into AI. They're trying to hire talent away from the best startups out there and the best minds in AI. So it's a very competitive space, and investors are betting on Elon and they're betting on AI. That's the bet. So are you going to take that bet? If you're a VC, when do you start asking Elon, where's the cash? Not to mention, Musk is really spread thin, right? He's got a lot of criticism because of Tesla and his abandoning of that business to go do government stuff. Now he's supposedly back, but you still have SpaceX. He's running that company as well. And they just had a rocket explode. And so the adage is always to never bet against Elon. Never bet against Elon. Too many people have lost a lot of money doing so. And so I'm not betting against Elon on xAI. xAI has gone from nothing to a $100 billion company in about a year and a half. So you never bet against Elon. But at some point, these AI LLMs and all this enthusiasm around AI has got to stop. OpenAI at a $300 billion valuation also seemed like it was starting to hit a ceiling. Now, OpenAI is doing $10 billion in annual revenue right now, and so they're still growing, and they're selling their LLM. They were a first mover, and there's an extraordinary company, an extraordinary story, and we'd love to see it public. xAI, we'd love to see it public too. And I think if it went public, investors would pile in. I mean, VCs are piling in. But I'd rather see it public so that we get a fair valuation. Frothiness in AI on one hand, in this LLM, crowded space, xAI at whatever valuation, $100 billion valuation or more, borrowing money, spending billions to grow. And then you have this leaner company called Anysphere that has Cursor. And VCs are knocking down the door trying to just invest at a $20 billion valuation. So it seems like the story of the LLMs has already passed, and now we're looking for opportunities in growth companies that are utilizing AI. So if you're considering an xAI investment at that $120 billion valuation or more, and certainly you can find higher valuations out there, recognize that xAI is paying 12% on debt and burning through $1 billion. If you want to believe that Elon's going to do it and never bet against him, then go for it. But my money's staying out, and I'm looking for the smaller companies like a Cursor. If you want to go all in on Elon, there's lots of opportunities to do that, and xAI is just the latest one. Well, we'll see how this plays out in the next 12 to 18 months. Although things seem to be moving a lot faster than that, we might get some news in the next week or two. That's all for the show. A couple ways you can support the show. Just like us or follow us wherever you consume your videos or podcasts. Join the Access Club. That's our exclusive membership community where I share deal alerts and I get feedback from readers about what companies to write about on the IPO Radar lists. I also share bonus content, especially when these IPOs are coming through the pipeline. We dig a little deeper into the S1. Members share their allocations that they get from the IPOs and where they get their access, and also share deal alerts from pre-IPO platforms of where you can find good prices on the companies that you want to invest in. So join the Access Club, go to accessipos.com, and there's a link in the menu. That's all for the show. Thanks for watching. Thanks for listening, and I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.